Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's kick things off though with that 1 hour time frame here for Bitcoin. So here we have BTC paired up with USDT. We're using the 𝗕𝗘𝗪𝗔𝗥𝗘 spot exchange here for this analysis. As you can see, we did come into and tap into the Z-wave structure. This was basically between $28,011 and $28,870. Okay, so our minimum expectations have already been met, although I am still hopeful that maybe we'll have another chance at tapping into this slightly higher range. Now, from an Elliott wave theory point of view, we can see here we have completed a mini three-wave correction here. It does look like it still has the potential to come down a little bit deeper though, so we're just going to go ahead and sense check where we got to with this. Okay, so we can see here that we had that initial move down, we bounced up and we come down just short of the one-to-one. I'm quite happy to say that we've probably already finished this one because of how close it got to its end point. Okay, so we can see here that this three-wave pattern looks to me to be complete. Let's remove those fips. So with this little mini correction to the downside, what does that mean? Well, it means that we might start to see a little bit of a break upwards into this slightly higher range. And with that, the potential for an invalidation of our five-wave structure on the daily time frame, which we'll walk through in a moment. Okay, so as we take a look at this, if we do go ahead and pull this across, we can see there's the potential to come up to 28,800 to 29,076. This is that breakout that I've been talking about for the last couple of days. Okay, we're looking for a breakout of a bearish structure that it finds itself in on the daily, and this is where we potentially get into that. Okay, anything above 28,588 essentially. Now from here we can see that this would be a three-wave pattern like this, and that would also fall in line with our Z-wave pattern, which will probably have to be on the slightly lower side than the higher side for that to kind of play out. But as you can kind of see, we have this idea of moving up more towards, and we've actually already hit that one-to-one to be fair, so there's no guarantees of it, but it does to me look like we still have that requirement to come up a little bit more. Okay, and it could be under a W, X, Y, X, and Z if we were to rally up higher than 28,483. I know it's a little bit complicated, it's a little bit hard to follow. I did put a course together for Elliott wave theory for anyone who is interested. Do join us in Discord. We can get you all the links and all that kind of stuff there. Ultimately, it looks like we have a break to the upside to be had here. Now, we are still in a bullish structure as well, so we're not in a bearish smart money concept structure or anything like that. Smart money concepts tells us that we're also moving up. Elliott wave theory also tells us that we're moving up. Obviously, the question just becomes, are we going to pierce higher and get the breakout of our structure at 28,588? Okay, so let's take this up into that daily time frame and talk about that. Okay, so we have a five-wave structured move to the downside. Okay, in order for us to invalidate this structure, we have to have a breakout situation. That breakout situation occurs at 28,588. That's this white line in the middle here. Okay, I think there's a high probability that we do get this breakout of our structure. However, we have to consider that there's always a possibility that we do not. And if we do not break out of this structure, then the structured move is indicating a $22,000 to $23,000 Bitcoin. Okay, so we need the breakout in order to prevent that low. So that's kind of what we're looking for. We have the ideas, we have the structures on our smaller time frame to see that breakout. We haven't yet seen it happen, and we do have a hard and fast line here to say that that breakout occurs at 28,588. Anything higher than that, that's great. We can basically mark this as a three-wave correction to the downside, although it overextended past 1.618. And then of course we can then say we've got the breakout situation. Behaviors have changed, right? Because what we're doing here, Elliott wave theory tracks people's behavior, and so when we take a look at the behaviors, those behaviors may have changed over the last couple of weeks or so. And so it's important that we track how people are behaving and whether they deviate away from their historical patterns and so forth. So for now, we unfortunately are still in the bearish structure. We still are heading down towards $22,000 to $23,000, but we do have that ability to break out of this pattern out of this structure and see us with a a different pattern forming. Now, that doesn't necessarily mean that we're going to go up to new all-time highs or anything like that. What it will mean, though, is that we are no longer in a 5-3-5 situation to the downside where we'll be looking at $20,000 and we could actually map it out. Instead, we'd be looking at a potential three-wave pattern that would look more like this, as a W coming down here, a Y wave coming up and still coming down towards 22-23, but you won't come down in its more bearish trend-based pattern. And there's a slight distinction between the two. So it's important that we understand that if we see a 5-wave pattern, that we want to kind of avoid those to the downside if we don't want to be bearish on the market. And if we want to be bullish on the market, we ideally want to see 5-wave patterns to the upside. When we see 3-wave patterns, it's all short-term corrective, and it basically is no trend. It basically just tells us that we are going to go down in this direction or up in this direction for a short period of time, and then it's going to reverse on us. And so we want to see trend-based patterns, obviously depending on whether you are bullish or whether you are bearish. It works for you in either way, because you can go long and go short on the market as intended, right? And obviously there's links in the description down below if you want to be using any of the exchanges. Obviously just make sure you follow the terms and conditions also listed down in the description. Obviously going long and going short in the market is quite profitable. You're able to kind of use leverage as well to multiply your gains, but of course it will multiply your losses as well. So just know and understand the risks that are involved, and any investments that you do make in cryptocurrency, in the potential to lose all of your money and all that kind of stuff. The stuff that we usually talk about and then the disclaimer at the beginning of the video. So for the most part, it looks like we still have the idea of moving down. We haven't broken out yet, but there is the breakout potential here. Ultimate rejection is happening at equilibrium on the daily chart. As you can see here, right now, you can see that that really is coming in about $28,000, and of course a little bit higher than that, it's about $28,400. So that's where equilibrium sits. And equilibrium is basically 50% distance between your swing high and your swing low, and ultimately is where we are finding the 50% rejection at the moment. Okay, so breakout is potentially there. It's not happened yet, and so we're going to be paying close attention to that. Ultimately, we're bearish for now on the daily time frame. Stochastic RSI is high. So it's not looking strong there. Volumes are low. We got RSI high, and I don't think there's any hidden bullish and bearish divergences. So all of that is okay as well. So ultimately, yeah, we are looking bearish at the moment. The only positivity to be seen here is that we are above the 50 EMA, above the 50 SMA, and above the 200 EMA. Take this up into a weekly time frame. Yesterday's weekly close was above the 50 EMA, so the bulls have managed to close that up there. So again, it's looking strong. However, I would, as I said yesterday, kind of be a little bit nervous just around what we see here with higher highs and higher lows. These do have a tendency to want to break on down, and when we have lower highs and lower lows, those have a tendency to break on upwards. We can see these on multiple different scales, and time again. For example, higher highs and higher lows have breaks to the upside. Lower highs and lower higher lows have a break to the upside, and the opposite is true. I've said a while back that this looks like one of the biggest kind of bull traps in Bitcoin's history, because we're doing this on a grand scale of things, where we are in higher highs and higher lows on a grander scale, and ultimately with low volume, this is not a good indication of things to come. Potentially this is a bigger break to the downside, and of course we are looking down here at $10,000. We can see this as a WXY particular pattern, where we can see break down here further to the downside. So we want to be aware that there's still the potential to even come down really bearishly towards $5,000, $7,000, but we don't want to talk about that just yet. Ultimately, things on the weekly time frame are not as strong as maybe we would like them to be, but there's still plenty of time before we see any major moves, in my opinion. I think we've got the rest of this year before we see any kind of major movements to the downside, maybe just a bit more sideways trading, things like that. But ultimately, at some point, I think we are going to have a break to the downside, a natural healthy correction where we do start to see profits getting taken off the table, and we see a lot more accumulation occurring, and hopefully a little bit more demand coming in for Bitcoin. Guys, that's going to wrap up today's video. If you have found it useful and informative, smash the like button. If you're new to the channel, subscribe. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link in the description below. Until the next one, though, guys, have a fantastic day.